All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Monday, March 27th, 2023. Thank you so much for taking the time out of your day to join me this morning and every morning at 9 a.m. Eastern Standard Time here on the YouTube channel. And if you haven't already, we're trying to get to at least, well, the goal is to get to 10,000 subscribers. We're right around 8,000 or so. So again, if you haven't subscribed yet, please do. It takes 2 seconds. Just click it. And really do appreciate the bump in the numbers for our YouTube channel. Been doing it now for a while, so I really appreciate that as a favor to me for doing this video daily with you guys. Okay, so we're over the weekend. The weekend's done. We didn't get much in terms of bank headlines, but if you guys remember, we did play Bank of America puts last week as a signal. And we told everybody, hey, you may want to get out of your shorts or your positions because over the weekend we can get any kind of headlines that'll boost the banking system, right? Or something like that. And we didn't quite get that kind of headline. I think the biggest headline of the weekend was that, what was this? I always get the First Citizens Bank to buy large chunk of failed Silicon Valley Bank. So that's going to go ahead and keep the actual kind of the banking sector with a heartbeat at this point. And of course, we know they're very near oversold conditions. So if anything here, okay, I'm seeing some headlines here, for example, First Citizen saying it'll keep Silicon Valley Bank employees. Now, you kind of have two sides of this. Is this just the beginning of all the bank failures that it might happen because the Fed is raising interest rates and they have those treasuries in their portfolio that are mark to market weaker? Or do you have that this is just a blip? And again, if you're in the just a blip category, it's very similar to the it's just transitory category. And the transitory category was me, if you remember. So a part of me says it's a little bit of a blip. A part of me could be that the other side is that we may have more shoes to drop. It really just depends on interest rates and the stress of the banking system in terms of liquidity. The Fed seems to be throwing everything they have in terms of liquidity to the banks. So does that mean when I'm saying that you should go run out and buy financials? No, I'm not saying that at all. But there is some opportunities to buy. First, to buy some calls, some upside. Look at XLF, pretty close to a triple bottom. Again, on the daily, we know that. Let's go to the weekly. That 50% retracement level has been absolutely key for this XLF. Now, this is the financials. This is not the bank. This is just financials, the whole financial sector. So again, looking at that 30.89. If you were, and we had a gap here. If we were to go long on this, what is the level you're looking for? That's pretty much what you're seeing. So let's go to the daily right quick. Again, 33 level just ping pongs you back to where it was. And then you'll have a stop right around 30. You could do that. But again, those don't move as much. Let's take a look at Bank of America. Again, this is a name that I played last week with the team twice. So taking a look at Bank of America, we're on the hourly chart, nothing special. We'll take a look at the daily, if there's any gaps to fill. And I don't see any. So not a lot of edge here on Bank of America except for downside. Say JPM. And again, we want to keep the eyes on financials. Take a look at this. You have that 200-day moving average. You're bouncing above it now, 127. Really, the level you're looking for is 128.35. If that does break, then we'll take a look at possible some upside calls on JPM. I left it there, but again, you could see that support, and it's holding the 200-day moving average. Pretty big for JPM. Let's go take a look at Goldman Sachs. And again, I'm just going over the names that we trade often. Goldman Sachs, Bank of America, JPM, those names. Wells Fargo, we could try too. Take a look at this. We have our two, see if we can go ahead and draw this. A little bit of an, there you go, upward trend line. We are holding so far, but there is a gap at 341 on Goldman, 341.07. I don't think I want to play that too far out of the money. Let's take a look at Citi and see if we're at any kind of meaningful support. Citi may have some more downside, but there's no gaps or anything special to fill. So again, we'll keep an eye on financials, but there's nothing special about them yet. So that's where we are. Good morning. Good morning. Let's see. What's your opinion on Fundrise? Fundrise is great, Arcady Fish, and they are liquid if you need the assets too. They do allow withdrawals. Again, I've read it online. Other of my friends have had Fundrise. They got their access to their funds. Again, it's a REIT, and they sell you REIT shares. So again, those REIT shares are priced by the market and what they have in the portfolio. So it's not an open market the way you would think the stock market is. But again, it is liquid, and I like Fundrise. I'm an investor in Fundrise. Let's go around the horn. I didn't get a chance to do it yet because I was focusing on financials and why we didn't stay short over the weekend in terms of banks. Dow up 206 points. That's all banks currently. NASDAQ up 0.26%. S&P 500 futures up 0.59%. Russell's up 1.14%. Remember, I'm holding IWM puts until April 21st, so that's going to take a little bit of a hit. But again, I don't think we've broken anything yet, so I'll take a look at the open. Crude oil up 1.86%. That's helping energy this morning. Some of the laggers this morning I'm watching: Apple, Google, Meta, Microsoft, all red. Eli Lilly is red. And again, you're seeing the main tech companies that are selling a little bit. I think what you might get today, guys, is a little bit of a rotation out of tech and into value financials. The problem is, guys, we had this on Monday and then we re-rotated out. So again, we're going to keep an eye on the NASDAQ today. Maybe we get a chance to get under it if we get any kind of breaks. Let's see here. Gasoline futures, $2.58 a gallon, 1.18% to the upside. Gold futures hit a little bit of resistance at that 2,000 level, now at 1949. 10-year treasury yields are up 3.498. The dollar is at 103.07. VIX is down 21.43, down 1.43%. Bitcoin futures 27,820, pretty much stuck at 28,000. Until we can get above 30, it's really a moot point at this point. 107.74 for the euro dollar. We know that leads the way for S&P. That's up about 14 pips. Dollar yen, when the dollar is above the yen, 93 pips, usually breaks yields with it. 131.64 and 122.44 for the pound dollar, up 0.12. Copper futures, $4.06. Really just keeping an eye on that $4 level. Taking a look at S&P this morning, we had a nice push overnight and the Sunday morning. Watching it last night. Here we go on the S&P 500 futures. Again, you can kind of use SPY or any other proxy that you want to use. But again, keeping it simple with S&P 500 futures, 40.26 right now. I had an alert at 40.30 and we broke it and pulled back. Really the level you're looking for, guys, is 40.40. That'll just take you to last Wednesday's levels. If you remember, we had a push into Monday and that was value led. Tuesday gave us the tech leg of it. And then Wednesday, we fell. Thursday, we bounced and fell. So again, pretty choppy, but end of the week green. Really the level we're looking for. 40.40, that'll get us above Tuesday's highs. That'll get us above Tuesday's highs. But 40.60 will get us to the level not seen. Let me see if I can get the exact date on this level here on the S&P. This was the recent spike that we had. I want to say was sold off because of Janet Yellen and Powell. That was right here. 40.74. Again, 40.40. You get to right here. Here is the date. This is the date we're looking for. This will get us to March highs. So again, we are getting into the end of the quarter. Are we closer to getting to the month highs, or are we going to be closer to just chopping? That's really the question you have this week. Again, 40.40 breaks. Keep an eye on 40.60. I may want to go long futures there. If we get above 40.40, once we get a 40.60, I'll go ahead and slide my stops on 40.40 entry and see if we can finally break out to 4100. Again, that would be the highest level that we've had since February. But that would be March highs. So again, the 3rd or the 6th of March, the high was around 40.65. If you break above 40.40, you're looking at possibly going to 40.60 and possibly 4100. I would go S&P long. If not, I'd go SPY long there. Again, we know that March is usually, April is seasonally bullish. So here is the levels on SPY. We're looking for, first, we want to get above 399.94. If we can break above that, then we're looking at here, 406. If we can get above 400, let's just say. Again, I'm going to keep an eye on it and see if I can play the 404s. That just gets us back to March highs. And again, our stop would probably be around 398.48, if not around 396. So again, kind of a 5 to 4 risk reward ratio in terms of the money on SPY. But again, we still have that trend line above at 400. So 400 SPY is your key level. That's the level you're looking for if you're playing S&P this week. And if not, we're going to take a look at Qs together. And Qs right now is trading at 311.78. We need to break above 311.85. If that does break, I'll keep an eye on the 315 calls. That'll be mixed with that bullish call of getting us near the March highs and end the actual quarter very nicely in green and break the month's highs. So we'll see where we go from there. As of right now, I don't want anyone trying to get too excited yet. And the reason I say that is because we had this price action on Monday last week where technology kind of got rotated out, and then you saw the banks bid, and then they flipped. They flipped lower. So, let's just go ahead and see the day at a time, a second at a time, excuse me, a minute at a time. We've had a really great week. There's no reason to give anything away. We don't want to give away anything this week. We don't want to do anything dumb that'll ruin our month. So we want to take it easy, keep the approach on the focus. Again, base hits. That's all we're looking for. We're looking for one after another consistently. We don't need home runs. We don't need thousands of percents. All we want is to make trades and make money like an ATM machine, 40% at a time. Again, when I take money out of the ATM machine, I'm not staying in front of the ATM machine. I'm getting my money and getting the hell out of there. That's how we're going to think of the approach this week, because it could be extremely volatile. It could be a bunch of things going on in terms of headlines. You also have rebalancing at the end of the quarter, which is going to be on Friday. It's going to be a fun one, let's just say. It's going to be a fun one. So again, take it a trade at a time, a step at a time, manage that risk. Just because you've done great lately doesn't mean you should go crazy on your risk. Take it a step at a time, guys. We'll get where you need to go. But again, we want right now the focus. Let's end the quarter strong. That's it. And again, we got 5 days to do so. All right, guys, we'll leave it there. Have a great rest of your Monday, and I will catch you guys tomorrow for the morning note. Let's make it a great one, a great trading Monday. Cheers.